Exactly.
No, but the herd mentality, though, are people going to speculate?
Yeah. Welcome. What's your name? Ed. Nice to meet you, man. I'm Kay. Feel free to sit anywhere you like. Just kind of getting started right here. So test.
It's more of the herd mentality, though. You know, the prices through the sky to begin with, the PE ratios, all that, the benefits are all built in. But will people assume that the bad news has been resolved and that it'll rebound to where it was back on Thursday?
Yeah. So since it's we're going to give it like 15 minutes for people to come in. So right now we're going to talk about Tesla.
Okay.
And I know it's probably your first time, but welcome. Or maybe second time. Have we seen each other before?
No.
Okay. Well, first time.
Yeah.
So just by default, Tesla, their fundamentals are poor.
They're awful.
Yeah.
Right.
And they're just mainly betting on this social premium. Welcome, guys. This is the investment club.
Yes.
Yeah.
Yeah,
Welcome in. Yeah.
Thanks.
Hey. So a lot of new faces. My name is Kay. I'm the host of this meetup.
Nice.
So feel free to sit anywhere. Hey, nice to meet you.
Nice to meet you.
Yeah. Feel free to sit anywhere.
Hi, Bernard.
Just to let you guys know, today's the advanced session, so I won't be explaining as much, but I guess if the majority of people want to know, then hey, I could explain it. With the amount of new faces, I'm going to give it like another 10 minutes for people to come in, and then I'll do a quick introduction. And then, so right now we're talking about Tesla. Bernard right here had a question, so we're just looking at Tesla.
So I guess my question would be this. If the news came out on the weekend, between market close Friday and now, how can you get a feel for what took place on Saturday and or Sunday that's a leading indicator for what might take place Monday morning first thing?
Man, you're asking a super difficult question.
No, I know.
Yeah, so what do I see for Monday, right? I think this one's very choppy, so I can't tell you. I'll tell you this. I know for sure it's going to be choppy. But I can't tell you exactly what direction, but I would have a short bias. I have a short bias on it, so I think this stock will go down. Because fundamentals are very poor. I think there's a lot of social premium priced into it. Now, I think the crowd could bring it higher, but the professionals will bring it lower because the fundamentals, right? They're not a big gross margin business if you look at them.
No, the sentiment has been negative for quite some time. That's why it's shorted so much.
Right.
But this is a very unique situation where Friday, real bad news comes out. Tanks 15%.
So I'm talking prior to that, the fundamentals are already bad. They're not really making money, right? They have increase in EPS losses at about $7 a share.
However, two news factors came out that they may have met their Model 3 target, and the CEO is still the CEO. So two major pieces of news on the weekend. So what, how much of undamaging of Friday do you expect?
So, I mean, long-term picture, even if we got two new great news or bad news, fundamentally, it only makes $14 for every $100 it sells. 14% margin.
Yeah.
Right? And after marketing, sales, and all that, the expenses, they're losing money. So to me, it's like it could keep going up. The crowd keep pushing it up, and just like not really care about fundamentals. But long term, it looks like this company could be like down to like let's see about half. But I'm looking at technicals right now. It's kind of holding this $250 price area. I think this one could revisit 200 if it breaks down 250.
Yeah, and more bad news that Audi and Porsche both announced new electric cars in the last week, which are stellar looking. They look like they're traditional, beautiful cars, all electric. So their uniqueness of the electric, aura is diminishing too.
So on top of, let's say, shady management, he's popular, but then as of late he's been acting kind of bad with smoking weed and all that, right? And then increased competition. Margins are already 14%. More competition means even less margin. Right. So that's even worse for Tesla. Right? So right now, I think the only thing holding it up, I have a short bias. So that's my disclosure. But this is all for educational purposes only. All right, I'm not recommending.
No, of course not.
Yeah, I mean, I always have to say it for like new people and stuff. But I don't like the fundamentals. Right? I see that as losing about $2 billion in income. That's a lot of money, man. I think this one could go down. So. I mean, you're talking about the most immediate trade.
Well, so let me look at it this way. At 6:25 in the morning on Monday, what would you say the best sources are for, other than just simply what sources of information at 5 minutes before the open would you say are the most leading indicators for what's likely to happen in the first 2 hours of trading?
NASDAQ pre-market. So what's going on in the pre-market? So now that we're looking even closer, right? Normally I have a daily chart right here. Today's the advanced session, by the way. but we're gonna have to jump into like a 5-minute chart over here. So you're asking me like, what's the most or best way to kind of identify what would happen, right? Well, I would start looking at pre-market. So pre-market would be the gray area right here. This is actually post-market. By tomorrow, by midnight, it'll be pre-market right here. So I would look to see what happens right here. If we start gapping down further, then I think this thing will be quite oversold and we might get a buy the dip type of play. So in terms of short-term trading, it's going to be very choppy, very lucrative for the short-term trader. Hey, good morning, Raj. Nice to see you online. Oh, you can't see the screen. My bad. There's like 8 people online, but you guys can't see the screen. Okay, let me just share real quick. Let me know if you can see it right now. Okay, so
what you're saying from 12 midnight till 6 is where the pre-market
so yeah, exactly. So I'd be looking to see what happens right here, right? So as you know, the news came out, whatever. This is post-market. Well, I'm sorry, no, this was Thursday. So this is Friday right here, right? Friday is trading day. This is pre-market, and this is post. So PRPO. So this was after Thursday. It tanked pretty hard, right? So I want to see. This is Friday.
Oh, that's Friday.
So this is Friday post-market, and then, I'm sorry, Thursday post-market, Friday pre-market, and then Friday. Now Friday post, then Monday pre. So I want to see what happens on Monday pre-market. If this thing goes like this and starts tanking further, I think there's going to be a buy the dip mentality, and it'll go up during intraday.
So you mean the Friday post-market, there wasn't a lot of movement, right? Sort of flat line.
Yeah, I mean,
right?
some big guy, some big fish kind of exit their position. You can see right there. And then, you know, small traders or money managers try to buy the dip. You didn't see any dip right here. So during the trading day on Friday, it started breaking down even further intraday. So I'm looking at probably another down day on Monday with a positive on Tuesday potentially. Now this is very speculative. This is day trading. From a very long-term perspective, mid to long-term, I'm short biased because this company right now gapped on a high volume. I'm going to see this continue as well. So I would personally avoid this. It's not even a great business model. I mean, they make great cars, but they don't make a lot of money on each car.
No, you're right.
Right? So I mean, at scale, they're not really making a lot of money. I'm not excited about Tesla. I'll probably be more excited to short it. So that's kind of like my view on it.
Okay. Thank you for covering.
Yeah, you're welcome. So. It's about 6 minutes in. We have a lot of people online and also quite a bit of people in the room. I was thinking since there's a lot of new faces, I could do a quick introduction. Let me just see who's online real quick. I'll do a quick introduction, and then after 5 minutes, I'll do what we're going to talk about today, and we'll go from there. So if you guys haven't met me already, I'm Kay. I've been doing this for quite a while now, about 2 years. This is my number 89 session. So I teach for 2 hours each session. We started off at Starbucks with just 3 guys, and then we moved to Milpitas Library for about a year and a half. And so that room got a little full or empty, whatever you want to call it. I just felt like it needed time to change. So we recently got into this office about 3 months now. So we were in the Milpitas Library for a year and a half, so it's been 3 months here. So that means I had to become a realtor. So I did become a realtor recently, just to get access to this office. No. Sort of, kind of. No, you say?
Is that true?
Yeah, I did become a realtor recently. So I got my real estate license to get access to this office, so now I have access to it 24/7. So I also throw mixers in here once a month, just to network with tech executives and stuff. So we throw out flyers and marketing on Meetup, and we get tech people come in. So we get CEOs, investors, small business owners. They come in on that one day out of the month just to kind of chit chat and party, just talk business. So because if you're into, I mean, this goes beyond trading, but if you're into like small businesses or private equity or venture capital or even investment banking, you have to learn about sourcing deals and what it takes to kind of find the deals. If you don't have a reputation, you got to pick up the phone call and keep calling for those deals, dial for dollars, they say, right? But if you have the reputation, then the deals kind of just come to you. So I know that, right? And I always say, like, what if I pick up the phone and this is Warren Buffett speaking? The person on the other side will drop everything for your attention, right? So I think having an audience is extremely important. From my personal end, you know, I don't know if you guys came here through Stocks All Day or Volatility Club, but the original club is called Volatility Club. What I learned about the name Volatility Club was that it's a little bit too technical and people don't really remember it. Like, it doesn't come on like top of mind when they think of like this investment club. They actually have what I noticed is a lot of people have trouble remembering like first of all, what is volatility, right? So to me, the name is very special because I was actually mentored by a hedge fund manager for about a year, 9 months to a year if I recall, and he introduced me to volatility trading. And if you guys follow financial markets enough, you understand financial engineering and people engineer financial products. Like ETFs, ETNs, or just ETPs in general, right? Exchange traded products. So you'll see like a S&P 500 Spider ETF to a triple leverage gold ETF called DUS or Nugget, right? So he taught me all that, and he introduced me to volatility. And volatility is just really an interesting phenomenon that exists in options trading. I won't go so technical, but he introduced me to that and how he became rich in 2008 off of trading volatility. The gentleman made about 23 million, if I recall, 23 or 26 million. He showed me his Charles Schwab brokerage in 2008. So from there I got inspired and I decided to start Volatility Club after I left Morgan Stanley because of conflict of interest. They wouldn't really let me trade what I wanted to trade in, sitting at a broker dealer. So if you want the flexibility to kind of do whatever you want, it's better to be outside of the broker dealer rather be in there. So at Morgan Stanley, typical financial advisor model. If you guys know any financial advisors or met any, the model is quite simple. You raise money, you go out there, you dial for dollars, raise money, raise 100 million, and you charge like 2%. And that's how much you make a year. So the whole model itself is wealth management, and it's like, hey, keep your money with us. We're going to put you in the most conservative, which won't make you rich, the most conservative investment ever, so that we could preserve our AUM, so that we could charge 2% on that AUM, right? If I raise 100 million, I want to just keep that growing or constant, because if it starts going down, my salary goes down or my income goes down. So I noticed that's a bit of a biased model in the wealth management, but that's just the nature of the reality, because there aren't that many technical groups like this that really focus on like hedge fund trading or private equity buyout or venture capital, right? Early stage venture capital, how to source a deal in venture capital. So we try to go pretty broad in this investment club. Over time, I categorize this investment club as not a traditional investment club, but a alternative investment club. So traditional is like stocks and bonds and real estate, right? But this club, alternative investment club, we talk about commercial real estate, private equity, venture capital. Yet last week I talked about how to find an off market on real estate just through a cold call. I don't think the same people were here. You weren't here last week, right?
No,
Yeah. So I showed a recording where I made a cold call to a gentleman who's 87 years old, owns a property, and how I kind of approached that talk track just to see if he could sell the property to me, or at least I could help him to reoperate for cash flow. So we talk about very opportunistic, very advanced investing, right, I'd say. But that's what makes this club interesting. So that's the introduction to the Volatility Club. The Stocks All Day meetup, I recently acquired this through my sponsor. My sponsor is a commercial real estate investment company. They basically pay for the mixer food that we have out here. Let me show you a quick picture of the mixer. So the people online, I apologize. We have quite a bit of new faces in here, so I just want to do a quick introduction. So every once a month we throw this mixer right here, right? People come out, and this is where I go out there and network. Networking, so another reason why I run these meetups is that maybe eventually I want to start a fund. So starting a fund requires people. And if you know, in the Silicon Valley, it has one of the deepest balance sheets out there, right? People, on average, a lot of people that are high net worth. So I throw these mixers just to go out there and meet people. If they want to join my investment club, great. But also, it kind of connects you with other people. So this girl right here, you can't see her face, but she introduced me to another gentleman that we talked about last week. His name is Greg Bunker. Had a meeting with him and then learned that this gentleman makes about $1 million a month. Now, I haven't quite confirmed that, but he does it through owning about 215 or 250 Silicon Valley real estate or units, right? 215 units, that's quite a bit. My sponsor, on the other hand, they own about 600 units, and they focus on Texas residential neighborhood investments. So what they do is they go into Texas neighborhoods, they buy out the entire neighborhood, well, at least from what I'm seeing, and then flip the neighborhood. But at the same time they flip it, they work with the government to get Section 8 cash flow and also tenant cash flow. So very robust investing, but like with anything investing, everything is a window of opportunity. If you don't learn to see it and take those opportunities, it's going to close and you don't make the money. So you have to kind of like understand and capitalize on these events. Hey, welcome. Yeah, this is the investment club. My name is Kay. Nice to meet you, man. Feel free to sit anywhere. You kind of just missed the introduction. But with that being said, we're going to kind of move on to the today's discussion. Yeah. So I said that I was going to do an intro, and then I said, did I say something else? I forget. Just lost my train of thought. Introduction, and then we'll jump right into it. So today, guys, is technical discussion number 89. Today is going to be an advanced session, so I don't try to explain so much on the basics, But if you feel like you really need help understanding something, let me know. So let's go over today's agenda. Let me just see who's online real quick. Okay, so quite a bit of people online. So today's agenda is going to be, the first part is going to be around the world look, which a lot of you guys know already, the people online. But it's just basically me analyzing the U.S. markets, Asian markets, European markets, and then specific markets like bond markets, emerging markets, volatility markets, currency markets, commodities markets, and also cryptocurrency markets. We're going to talk about that today as well. So a little bit more advanced, but it gives you an overview of what's going on in the world. And then we're going to look at the FANGs, right? We're going to look at Facebook, Amazon, Apple, Netflix, Google, and then Microsoft. Right, I have to look at this because to me it acts like almost like an S&P 500. It's a major indicator itself, just this collection of major corporations. If you actually look them up, they're actually the biggest companies in the world, right? So how they perform is very important. And then I wanted to talk about this new ETF. It's called XLC. This is where actually Facebook is categorized in now. So I just thought their model is actually pretty interesting. So I would consider taking some positions in this. And again, it's only for educational purposes. Then we're going to talk about semiconductors and kind of what I see in this segment, because I noticed that there's a lot of people in the group chat that likes to talk about semiconductors, so like Intel, Nvidia, and such. And then I'm going to talk about some other, a few stocks, one reversal, some shorts that I'm seeing. These are penny stocks, by the way. And then a dividend stock. And then the highlight of today's talk is actually going to be me showing you guys this hedge fund manager. This guy's worth about, let's see, $4.8 billion. And then George Soros right here. This is Stanley Druckenmiller. I watched an interview on him and I wanted to share that today. And then we have George Soros, who's worth about $8.3 billion. So they used to work together in the quantum fund, if you guys know, and they made quite a bit of money. George Soros is the guy who made $1 billion in one day. One B in one day is on. Not 1 million. Placing a big currency. Yeah, he placed a big currency bet. So we're lucky enough to kind of have this little interview. I'll give you a little taste real quick. I won't show you the whole 85-minute video, but we're just going to look at some of the highlights of this gentleman, right?
To do some physical activity.
So we're going to hear him talk, and you're going to see that even a billionaire uses a lot of technical analysis, meaning they're going to talk a lot about price action, momentum, and RSI, and all that. Because when I went to school, and I studied finance and economics, and I talked to like the professors who are PhD in finance, they would tell me like don't use technical analysis. It's voodoo, right? But in actual practice, you go out there and you actually trade. At least me trading for about 5 years now. I'd say technical analysis is my bread and butter, but I'm also pretty strong with fundamental analysis as well, right? Fundamental analysis is really what allows me to scale. So yeah, that's the agenda for today. Let me just do one more look, see who's online, so I know. Hey, people online, can you guys hear me? Are you guys good? Okay, cool. Okay, thanks, Aaron. Anyway, so let's start. So I always like to start off with this around the world look. I think some people online might get annoyed of me for doing this too much, but if you don't know what's going on around the world, then you're gonna. Well, I don't know. I find a great benefit to knowing where the indices are going because it allows me to kind of scale up my bets and my options trading. But so what I like to start off is with the S&P 500. That's, if you guys already know, S&P 5. SPY is actually the biggest thing I look at. It's really, to me at this point, it's like the heart of the economy. If you don't look at this, then you don't really know where the economy is going. I'll give you an example of why this is like the heart of the economy. And we'll tie it to the real estate office here. And I mentioned it several times already. But basically, we had if you guys have been watching markets, we had a huge pullback in February, right? So this is the S&P 500 that I have pulled up right here. And this is February. If you guys don't know, for the longest time ever, we've been going sideways, right? And only recently we broke out to new highs. So only recently where I started to really scale. In this environment right here, I guess you could say, more actively trading and stopping out a lot of my positions. It was really tough, but it was definitely a trading environment. So in February, the markets pulled back really hard, right? And in my conversations with the top real estate agents in this office, the market started slowing down around March and April. Isn't that kind of funny? Right? The stock market pulled back in February, and then all the agents started feeling homes were sitting on the market. To this day, today, I still feel some homes are sitting on the market. Though the lower price ones, like 1.2 million, they kind of go pretty quick. A lot of people are looking at the 1.2, but I'm doing an open house for a 1.8, and no one's really coming in. Yesterday, I did open house for a 1.8. I only had 2 parties. So I'll give you a little feel. So yesterday was the all-time low that I had for open house, but this is a 1.8. So I sat in a 1.2, 1.3, and we would have about at least the minimum, the lowest, 10 groups, 10 parties, 7 to 10 parties, right? And the highest I've had in a 1.2 was like 40, 43 parties, meaning different, it could be an individual, but it's a different party. So that's kind of, it kind of established a range that I'm seeing, right? And then yesterday, for all record low, $1.8 million home, I only had 2 parties walk in.
The whole day?
The whole day.
Wow.
On a Saturday. So it could be the weather, it could be fall and all that.
Where is it?
This one is located in Santa Clara, right by El Camino, right? So it's actually pretty interesting. Definitely the real estate market is kind of slow. I'm hearing a lot of agents complaining that their properties are sitting on the market, right? They're not getting like, oh, the first week open house, next week it's sold anymore. We're getting like 2-3 weeks plus on the market. So, but from a stock market perspective, I see that we're kind of recovering. S&P 500 is going to all-time highs right now. So I'm looking pretty bullish in the stock market, and I would expect the real estate market to maybe pick back up if the stock market sustains, right? So the real estate market, I think, will pick back up starting next year, because now we're approaching like the fall and winter season. We're going to see maybe it pick back up in like January, February, is what I'm kind of seeing. But stock market-wise is leading the way back up. So what the major key takeaway right here is that we're looking at the S&P 500 or SPY, Spider ETF, which tracks the heart of the economy. And we saw that the heart, again, pulled back in February, and then it just went sideways for the longest time. So I'm really happy that we're finally breaking up to all-time highs, because this is, to me, an indication that further higher prices to come. So, I could size up more comfortably now, right? So this is SPY. And we're going to flip it over to the daily chart and look at the advanced stuff. The key thing I want to take note here is that we've been respecting the 20 EMA for a very long time. My 20 EMA is that green line, as you can see, right? And the most recent close on Friday was above 290 and also above the 20-day moving average. So to me, that looks good. I think momentum in the stock market is still sustaining, right? As long as we hang out above this high right here of 285. Sorry, that wasn't like a really straight line, but it'd be a little bit over 285. So as long as we don't travel back below 285, I wouldn't be too cautious, right? So that's what I'm seeing in the S&P 500, or the heart of the economy. Yep. Now, I don't just look at one index, right? You have to look at multiple indices. You have to look at the brother and sister indices just to kind of get a feel of where the economy is going. So I look at NASDAQ as well, QQQ. Similar thing. Is it too small for you guys? It might be too small. Let me zoom in a little bit. Can you tell us what other lines are? Looks like some MA. Yes, so other lines I have, so today's more of an advanced session. So I'll give a quick overview. So what I have in here is the 200-day moving average, which is my pink, right? The 100-day moving average, the 50-day moving average, the 21, and then also Bollinger Bands. You could ignore the Bollinger Bands because I mostly focus on the moving average and the price pattern, or the psychological pattern that the market's showing me. So 200, 100, 50, 20. So what I'm looking at right now is that this is hanging out above all of them and is about right there, and it's above 185. So right now I'm pretty confident about NASDAQ. This is a top-down look, okay? We're gonna look at the world and then we're gonna look into stocks. So that's kind of the setup I have right now. Let me know if that kind of explained it. I don't look at the indicators too much, though I do have it on. And then we'll move over to Dow Jones. This is what I'm seeing with Dow Jones. So Dow Jones finally started recovering right there. So it's already at new highs right here, but it's kind of having trouble. But this looks good. I want to see it attempt to go higher. So as you can see, all 3 indices are recovering pretty well right now. And I think the markets have more than a little bit more than 6+ months left before we see some crazy action. Yeah, it's moving averages and Bollinger Bands. Yes. So overall, right, we are in the late stage of the business cycle, but we're in the mid-late. I said this last week, I think. So if you were to break, so there's early stage, mid stage, and late stage, right? But I broke the late stage into 3 pieces. I think if it's probably better if I draw it out, because some people are looking at me like, huh?
Can I ask you a question?
Yeah.
So how meaningful is the Dow Jones Industrial Average if they consistently take out the losers, GE, Sears, and they add Amazon and others? So over multiple years, it's not really an average at all. It's more of an average of all the stocks that they want to see that are positive and are removing all the ones that are tanking.
So they have
really a real average?
They have a filter. It is an average because they have a filter. This filter says these stocks have to be this criteria. If they fall out of this criteria, then they're not part of the index anymore. Because at every single time we want to look at the most heavy components of the Dow Jones. If it's no longer a heavy component, why do we have it in there? So we switch out to the next heavier one. If you see what I mean.
So if you looked at the
so GE went from like 400 billion to 100 billion. It's
right.
not that heavy anymore. We have to kick it out.
So if you looked at the Dow Jones Industrial Average over the last 10 years, it's not really a representative average of what's in it. It's the average of all the stocks that meet that criteria of performance. So how is that really?
It's shuffling out the bad and shuffling in the next good one constantly, right? But if all the good ones start tanking, that's, you see where I'm going with that? It's an indication of something, or at least it's a good indicator for the index.
So it's like an average of all the good stocks and removal of all the bad stocks. Yep. So if you invested in GE and Sears and wherever back in 5 years ago, that average was going along.
Let's just say I have an index, and my index is 100 billion market cap plus. I want to hold anything that's 100 billion and plus in market cap.
Yeah.
If anytime any of these basket stocks fall out of 100 billion,
right.
I'm going to kick it out and shuffle in another 100 billion.
Uh-huh.
So, but at all times, I maintain what the 100 billion is performing.
Oh, okay.
You see what I mean?
Okay.
So it's actually quite accurate. Now, going back to what I was saying about why do I look at these 3 indices, right? It's a major indication of the business cycle, at least for me. But you might want to do an inter-market analysis, meaning look at bonds and real estate and all that, just to kind of see where things are the bigger picture of things. But I want to show you what I mean by we're in the late stage of the business cycle. So if I were to break this out into 3 chunks, it'll look something like this. That was a bad one. So maybe, oh wow, I erased the line. So we'll break it into 3 chunks. So this would be a chunk right here, right? And this would be a chunk, and that would be a chunk. Ooh, I think okay, I might want to put a stage right here. So we could do 1, 2, 3, 4, right? So we're not at the bottoming, we're not at the mid stage, we're at late stage, right? And within number 3, I broke it into 1, 2, 3, or ABC, right? And within the 3, the late stage, we're at B. It's kind of like the general consensus I'm getting between money managers and what I'm seeing in the market. So we still have a C segment to go before we're like late stage. And that's what I'm seeing in the markets right now. So again, that's why I constantly do this around the world look. You guys might not like it, but so I noticed that there are some people who kind of just joined or came in. I want to give you guys a quick review of the agenda again. I'm going to go over the usuals, which is around the world look. And then I'm going to talk about this new ETF, right? We're going to go deep around the world looking at cryptos as well. And then we're going to go into the FANGs. And then we're going to go into this new ETF called XLC, which is where Facebook is categorized in. And then we're going to talk about semiconductors or that industry and what I'm kind of seeing. Just because in the chat, a lot of people talk about it. And then we're going to go over some momentum stocks, one reversal stock that I'm seeing, and then some shorts, some penny stock shorts. But the highlight today is actually this analysis or this interview with Stanley Druckenmiller, who's a 4.8 billion billionaire. So sorry to kind of sound redundant, but I wanted to just put this out. So I have some highlights. So the best part is at the end. All right, guys? And I have a hard stop at 12, so I got to kind of hustle here. Anyway, so that's what I'm seeing with the S&P 500, traveling to new highs, holding 285, which is good. QQQ, very respectful, the 50-day moving average. My 50-day moving average is the orange line right there. So 1, 2, 3. This is very powerful. This gives me indication that this wants to go higher. So I'm actually sizing up on my NASDAQ plays or my tech plays, right? Looking at Dow Jones again. This is what I'm seeing for Dow Jones, right? Hitting new highs. This is really good to see. Still holding the 20-day moving average. Looking at IWM. Now, this is looking at small caps or Russell 2000. This one is probably the least bullish out of the all, but it's still bullish, right? It's touching the 100-day moving average. So I want to see this hold the 100-day moving average. Is it too small for you guys?
Are you looking at green? Is that 20-day?
My green is, so my blue is 100-day moving average, right? So what I recall in like the past 2 months is that, we broke out into August, and the small cap and the mid cap, or Russell 2000 and the mid cap index, pushed the way into all-time highs, and then all the other indices started following. Now all the other indices like S&P 500, Nasdaq, and Dow Jones are leading the way, but small cap and mid cap are kind of lagging, right? But I would say 4 out of 3 are leading the way in terms of going higher. So I think this one will bounce at the 100-day moving average, which is the blue line that you see right there. So that's what I'm seeing for small cap. 3 out of 4 major indices are pointing to higher prices to come. Now, looking over to Europe, this is what I'm seeing in Europe. This is one area in the world where I'm kind of seeing concern. And right here we have the weekly chart in Europe. It's pointing down. I would continue to monitor Europe. So on Friday, we had a dip in Europe, right? If you guys look at the European exchanges. And then I thought, it would kind of pull down our markets, but we kind of went sideways on Friday. So we're still okay. But I would be watching Europe right now, just to see if there's contagion, The two scary parts in the world right now would be Europe, or European markets, and emerging markets. Those are the 2 areas that I'm seeing are pulling down hard, and I'm concerned that it could give contagion to the U.S. markets. But it could also be a bullish, scenario where, they're exiting their positions in the European markets and the emerging markets. Where would they go? To a safe haven currency like the dollar, and then into a dollar asset. So there is a bullish scenario for the U.S. But I think we might get a blow off top towards the end of the year. So right now my trading is kind of like, I'm looking at towards the end of this year, we're going to be going up. But I'm right when New Year starts, I'm going to be super cautious again. That's what I'm looking at. So we just had a comment online. Let me see. I heard in a comments the other day who saw the 15% drop in early 2016 as the last decline in the beginning of a new cycle. Yeah, so I mean, October is also a historically dangerous month. Yes. Early 2016. Well, I mean, okay, that's kind of like, okay, so this gentleman said that in 2016, this economist said that we had a large pullback, right? Yeah, we did. 2016, around this time. Right? This is S&P 500, but look at where we are today. We're even higher. So, that's just my comment on that. We're at all-time highs. In my experience, you can't really predict this. You just gotta play the direction. That's the safest bet. Play the direction. Play the trend. I'm not gonna go bearish until I get a break of the 200-day moving average and hitting its head on the 200-day moving average, and then I'll go start looking for a breakdown on the charts for an index. But for now, charts are looking extremely bullish, and I want to play with the charts. So that's what I'm seeing. So going back to this, guys, European markets, it looks kind of scary, but we'll have to continue to monitor. Best case scenario. The comment about 2016 was really a comment about the maturity of the bull cycle. Yes, so we were just discussing the maturity of the business cycle. We are at the mid-late stage. What I want to see next for these European markets, this is the weekly by the way, is something like the Dow Jones, right? Something like this, where it's choppy, but it starts to gradually rebuild back up. That's a better signal than what we're seeing right here. What I don't want to see is this thing start breaking down further. So I want to see this at least hold right here. I don't want to see it, the next day it goes like this, and then we start going lower. What I want to see is we start holding, going sideways for a long time, and then going higher for both of these, right? For Euro Stoxx 50 and the DAX. That's what I want to see. Only when I see that is when I become even more confident in just like, asset prices, global asset prices overall. But for now, that's the only concern. So moving forward, what do I see? So European markets are looking heavy. What do I see in the Asian markets? Man, Japan is looking good. So this is ideally what I want to see for the European markets, right? Japan had a dip in February as well. Everyone had a dip in February, but we went sideways, started hanging up. I'll draw some technicals on here as well, just to kind of show you guys. Let me know if you guys have any questions so far too. This is the line that I see right here, right? We know that, let's see, prior support, well, not really support, it became kind of resistance right here, resistance, now support, 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 and then you kind of have a head and shoulders right there. Now we're moving higher. So this is looking good. We're moving even higher. So as we keep going higher, I'd be bullish stocks like SoftBank. SoftBank is a stock, it's an ADR. Well, it is an ADR if I recall. It's a Masayoshi Son. You guys know him? He's a Japanese billionaire. He owns the biggest venture capital fund. I forgot the name of it already. The Global Fund or something like that. But he has a branch here. So there's a lot of venture capital going on in Silicon Valley. It's known as Wall Street West. Where do you find it? Just go to Sand Hill Road. That's where all the action is right now. That's where all the venture capital firms are located. So it's one of the beauty, at least economic beauty of living here in Silicon Valley, in my opinion. Yeah. But anyways, Japanese markets are going higher, so that's looking good. Now, can we confirm that with a stock? Let's say if the index starts traveling higher, let's look at stock then. All right, this is SoftBank stock. What does it look like? Right there. All right, let me go back to my picture real quick. So this thing started breaking out in September, going higher in September, and then you get over here June, April, May, June, July. Okay, so this one was already going higher, right there. So it's looking bullish for this stock, right? We like this security because in a very, maybe 20 sessions ago, I forget, we talked about ARM. You guys know ARM, the company? It actually develops every single chip in your phone. Like, yeah. Right, yeah, so they actually bought out ARM. And so, yeah. Hey, welcome back, man. So that's why I think it's kind of like a cool opportunity to own them. But I don't play too much ADR. Well, actually I do. But yeah, I guess you could say we missed our opportunity in here if you're getting in now. Though I think this one could go higher. So still not too late in my opinion for SoftBank. But though that was a good opportunity to own a piece of ARM. That sounds kind of funny. Okay, just real quick, if you guys don't know who ARM is. ARM is like a chip in your, they're focused on like everything, was it IoT related? So yeah, if you read their investor relations report, man, this is the chip that's in your iPhone. Correct me if I'm wrong, SK or people online. Right. I'm correct? Okay. Cool. So yeah, they bought out that company, and I think at a very reasonable price. Let's see, ARM SoftBank acquisition. How much did they buy it for? Only 31 billion, man. Considering Intel's at like 200 billion. So not a bad purchase for them. That's like almost as big as, that's bigger than Microsoft's purchase of LinkedIn at 26 billion. But the more we talk about these, billion-dollar price tags, the more comfortable I hope you get with it. For the new people in here, just to give you a little size, Apple's at 1.1 trillion, right? 1,000 billion, right? Intel 200 billion. So you get to see the size of this. The biggest venture capital fund, 100 billion. But going back to it, where was I? Sorry, I kind of digressed there. So that's Nikkei, guys. Japan acting extremely bullish and heading into new highs. So that's looking good. We got two corners of the world looking good, Asia and America. Looking at Asher, so talking about Asian markets, I also want to talk about Asher. Asher is the Shanghai index. So we know that the Shanghai index has been tanking pretty hard. So stocks like Tencent, Alibaba, they've been going down pretty hard. But we like these companies, or at least I do. So not a recommendation to buy, just for educational purposes. I like Alibaba, Baidu, Tencent. They're all opportunities to look at. I was going to say buy, to look at right now because they're trading at lows. The index is suppressed. It's depressed. And now we know the stocks inside the index are opportunity. We know that, we know these stocks are going to come back. So for the Chinese people in here, you know how powerful WeChat is, right? Or how Baidu is investing in AI and autonomous driving and all that. So huge market opportunities for them. And all their stocks are kind of depressed or at the low. And if you look at the fund manager holdings, they also like Alibaba and Baidu as well. You had a question?
Yeah. You don't have to
Yeah, so, sorry.
I'll look it up.
Yeah, it's just an options probability chart.
Okay.
Yeah, you can look that up. The name of it is actually right here. I'll show you. So I think I took it off already. Well, anyways, so I have it on just to show me like what, the probabilities of a price falling into a certain expiration date for an option.
Okay.
This one right here, right? Yeah, it's just showing me like the probability. It's nothing fancy. You could.
Is there a name for that indicator on Thinkorswim?
Yeah, if you have Thinkorswim, you could go into the probability analysis. It's under here, probability analysis, and you can put in SPY or something like that. Hey, welcome. This is the investment club. Yeah, feel free to sit anywhere you like. Yeah, welcome. So yeah, you could go in here and just put in a ticker, and then you kind of see like what's the probability of whatever option contract will expire at what date. Yeah.
I saw that before. I just haven't seen it with the chart. I thought it was something else.
Yeah, it's pretty cool. You could overlay with charts. So,
I'll
but
try that at home.
I mean, this is the advanced session, so I kind of have it on. But for the basic session, I kind of take everything off and kind of go naked charts and just explain things slower one by one. But anyways, going back to this, so we know that the Shanghai index is kind of depressed, right? So this is presenting opportunities for stocks like Alibaba or Tencent. So let's do Baidu. I don't have Alibaba in here, but this is what Baidu looks like. Whoa. Let me just remove this. So if you guys know, I mean, for a whole year, I was watching Baidu for the longest time, and then it broke out right here, and then now we're just like in like an extreme amount of consolidation. But it is at the lower end of this, right? And I think it's really respecting the 200-day moving average, though like a lower 200-day moving average, right? So I think, with what Baidu's doing, its relative size, I think it has some upside. Let's look at the size of Baidu real quick. Baidu market cap is about 80 billion, right? For what market opportunity it's chasing, I think it could be, a little bit bigger than that. So that's Baidu. Look at Baba. Baba is also at the bottom, right? People were buying it up here. Now Baba's a little bit lower. So I personally think we should allocate some time to look at it, but be cautious of taking a position. The main concern right now is just to track emerging markets in general. So we look at the Shanghai index. We know that's depressed. We can look at EEM. EEM is an ETF that tracks emerging markets. So everything with like, I was going to say Singapore, not Singapore, like Malaysia, Indonesia, China, Vietnam. These are emerging markets. India, emerging markets, right? So the ETF does a good job of like putting all those stocks into a basket and giving us one indicator or one chart to show us what this specific market segment looks like.
Asia?
Yeah, let's say it.
Asia.
Asia. Well, not Asia, but emerging markets. Yeah.
So the CEO resigning or departing, is that not a factor?
No, I don't think so. I mean,
really?
It's interesting he did it at this time, but then if you look at his track record, right? Jack Ma, he's really in love with his company. From the way I read the investor newsletter, that the letter to investors that he wrote, you could read as well. He said something about I posted in the chat like. I'll pull it up. Let's see, Jack Ma. I think he ran his company really well. It's just he got burned out, and it taught me so much, right? Let's see if I can find it real quick, right here. So, let's see. When Alibaba was founded in 1990, okay, no company can rely solely on its founders. Of all people, I should know that. This is Jack Ma speaking. Because of physical limits on one's ability and energy, right? Humans, physical limitation, no one can shoulder the responsibility of a chairman and CEO forever. He has been the CEO for like 19 years. So I ran this club for about 2 years now, every Sunday. Okay, I didn't have a vacation or anything. I've been here every Sunday for 2 years. I could relate to that. Like, it's getting to a point where I'm like, what, maybe I should just go all online, just do this in my PJs at home. But I respect the hustle. It takes a lot of effort and hard work to do something, especially for 20 years. I can't imagine. So I see that he's backing off, and I'm seeing that he also has great leadership. So to me, I'm not too concerned about him stepping down. One more thing that he said that I took note of that I thought was pretty interesting. The one thing I can promise everyone is this: Alibaba was never about Jack Ma, but Jack Ma will forever belong to Alibaba. Kind kind of cheesy but corny but really cool. Yeah, so I still like the company. I still like its economic positioning. Let's remove the bias that, oh, a CEO is stepping down, but let's also be objective and look that management is still okay, and market opportunity is still okay. The only issue is the index is depressed. So that's the thing that's dragging down Alibaba, not Jack Ma, in my opinion, right? So yeah, I still like Alibaba for its economic position, meaning that it has a cloud play. It's like known as not really the Amazon of China. It's like Amazon's Amazon, right? Like who do you go to buy stuff online? Amazon. Who do you go to buy stuff from China? Alibaba. So, or who does Jeff Bezos go to buy stuff from China? Maybe Alibaba. So if you know like margins and how they're kind of supply chain or whatever, like I'm thinking like, okay, the margins originate from China and it's being flipped onto Amazon because we got a lot of millennials or like younger age profile pursuing like 25 to 35 pursuing digital business models where they're starting like Amazon FBAs fulfilled by Amazon, and I'm seeing where they're getting their supply from. It's like European people, Australian people, American Asian people communicating with people in China through the platform called Alibaba, right? So it's like the supplier's Amazon. That's why I see their economic positioning is very powerful. Now, the equivalent of the Chinese Amazon would be like a JD. You guys heard of JD? I mean, that's another. I mean, it's like you wouldn't expect a regular Chinese person in China to go shop on Alibaba. Only SMBs would go on Alibaba. SMB meaning small to medium-sized business. They would go on there and shop for Alibaba for supplies or whatever, right? But what is the Chinese average person's Amazon? I would expect it to be JD because it needs that retail experience. You wouldn't go to Apple.com if it looked like a I don't know, like a Alibaba or like an eBay, right? Or something more like, I'm trying to distinguish between like B2C visual and B2B. So I'll give you an example of B2C, okay? B2C would be like StockTwits.com or TradingView. Like this needs to attract the consumer's eye. Like, oh, this looks pretty, right? But money managers look at stuff like this, right? This is the professional stuff. But it's not attractive for average Joe who don't have the discipline to focus on it. So they like to look at the pretty things like Apple.com, right? Aesthetically pleasing for the eye that attracts you so that they could justify their huge margins, right? Like, oh, this iPhone looks good. Well, they got me on the iPhone. It looks good. I want to buy it. But objectively speaking, I don't look at Apple this way. I look at Apple this way, right? So, oh, shoot, that iPhone I bought, they made about $400. It cost them $400 to, okay, so let's say an iPhone for $1,000, they made $400 off of it. It cost them $600 in expense. All right, so every iPhone is like $400. Well, the iPhone's really $1,200, so a little bit more than that. But anyways, this is how I look at Apple. And I mean, as a business person too, you want to look at just pure numbers. At some point, you evolve into just looking at numbers, and the marketing doesn't really hit your emotions anymore, if you know what I mean. Emotions are kind of like volatility. Volatility will spike and then decay. You'll get excited about some like huge event in life, and then that excitement will slowly decay, right? And then you wait for the next event like a Super Bowl or whatever to get excited, and then you'll get less excited. Over time, I noticed the spikes get lower and lower and lower. If anyone caught that joke, okay, I guess I should draw out like when you're young, right? When you're young, let's say up till 18, your spikes are super high, and then it'll decay, right? And then as you grow older into 30, I guess I'm not even 40 yet. Your spikes will be lower, right? Lower. Right, so your emotions are kind of like volatility. Short your emotions, huh? Sorry, we kind of digress with the joke. So anyways, did that kind of answer your question about like Jack Ma, Alibaba,
yeah,
what I think? I think it has strong economic position compared to Tesla, right? Looking at Alibaba as well, at their scale, they're doing pretty good with about 52% gross margin. That's impressive. And then operating margin is about 20%, which is pretty good, not bad. So I like this company, but I don't trade shares on these. I trade options on those. But moving on, I got to be aware of my time because I have a hard stop. So that's Shanghai, guys. We already talked about emerging markets, so this is what emerging markets look like. It's kind of setting up a falling wedge pattern right here, or it's a down channel. What I want to see next is probably a respect of the channel, but until the channel is broken and we move on to the next regime or whatever, that's when I'll start looking the other way. But right now, the main concern is the dollar. Why is emerging markets going down? Because the dollar is rising. Why is the dollar rising? Because interest rates are rising. If interest rates go up, bond prices go down, but dollar value goes up. So if interest rates go up to foreign investors, they say, hey, this treasury is paying more interest. I'm going to put my money in the dollar. And so that's why the dollar is going up. But because when the dollar goes up, it becomes headwind for everyone else. Right? When interest rates go up, it's headwind for the mortgage buyer and also the home seller. You want to sell your home, but the guy who's going to liquidate you can't really borrow a bigger loan anymore. Right? So it's headwind for everyone. So that's the emerging markets in Shanghai. Any comments on that segment? Good to go? Okay. So we'll move on to the next part. Let's see. I think we had a comment. What about currency exchange tariff issues with respect to Alibaba? The comment about 26. So the currency exchange and tariff. Yeah, I think that is a major factor. I can't speak much to it. So when we're talking about currencies, we're talking about a bigger level, a higher liquidity level. Who plays on that level? Sovereigns, big-time money managers who bet a ton of money, right? You could literally bet $1 billion into the Forex market and decide to change your mind in 5 minutes and get out. That's the type of liquidity you get in FX. I can't speak much to that because I'm still training my global macro skill set. Right now, my main skill set is probably U.S. indices, U.S. stock markets, everything from large cap stocks to mid cap, like blue chip stocks, to like penny stocks. So I'm really good with stocks. I'm still training on my understanding of global macro. So I want to reinforce my understanding of bonds. I'm pretty okay with that, not bad. Fixed income instruments, gold, oil, right? I still want to understand oil as well. If oil goes up, how does that kind of affect everyone else? Because it kind of adds a premium to our lifestyle, right? Like it's going to cost you more to come to me, travel to me, if you think about it, right? So now that's just at the individual level. You got to think about transportation of products. It's going to cost more, right? So that's one way to think about oil. But I can't talk so much on currency exchange and tariff. But we will look at currency in a bit. So moving over to volatility, what am I seeing in the volatility segment? I do have a volatility indicator that I'm kind of following. It's been switching up and down. But overall, looking at the S&P 500, it's looking pretty bullish. This volatility futures curve right here is still pointing down. It's in contango for me. So I don't see any great fear. This is the chart of it. This is the quantitative of it. Contango is still about 7%. So this is me analyzing the hedging in the markets. You guys understand hedging? Like let's say you take a position, or you buy real estate, right? And now that you own $1 million property here in Silicon Valley, what happens if you lose your job? So you're like, oh, I need to hedge myself with life insurance. That's a hedge right there. So that in case something happens to you, knock on wood, then the put option or the life insurance comes into play, right? You exercise it for the money, and now that you're gone, that money goes to your beneficiary, right? So that's a way of hedging. It's mandatory, right? Well, not life insurance, but health insurance, car insurance. You're hedging your vehicle. Now, you gotta be pretty smart about insurance. You might not want to. This is where you gotta be smart. Would you want to buy car insurance or hedge your car that's worth $50K, and you do a hedge of $100K? It's like over hedging. then now you have a net delta short or a delta long, if that kind of makes sense. Delta put. Okay, I'm getting too complicated in what I'm saying, but. That's the mathematics of it. You want to be kind of neutral when you're hedging. So that's the volatility segment, guys. Moving forward, looking at bonds. This is what I'm seeing in the bond segment. From the 2-year note to the 5-year to the 10-year and 30-year. Everything keeps pointing down. It's still going down. But you see these little patterns setting up. Breaking down further is what I'm seeing. So bond prices are going down. That means interest rates are going up. And we're hiking interest rates. So be prepared to analyze what's going on in this, in every asset class. Because I think interest rates hiking is headwind to almost every asset class. You just kind of have to understand the big picture. So we definitely are at a mid-stage, mid-late business cycle. So be a little careful, be smart about your positioning. The way you invest now should be more like, you got to put in more analysis effort. You can't just, it's not like 2013 or 2011 where you could just like throw the money and you make money. You got to be a little bit more cautious, in my opinion. Moving over to currencies, and then I promise you we'll get into the more interesting part, but this is the mandatory around the world stuff. Quick comment on currencies. Dollar is rallying. It bounced off right here. So this is the dollar right here, right? And if you look at every other currency, Euro, Japan, London, all kind of pointing down except for Canadian dollars. This one's pointing up. So this is interesting. It's showing some strength right here. I'm not a Forex guy, too much of a Forex guy. I'm just looking at the dollar in terms of like global macro, not Forex trading. But this would be something, I'm seeing divergence right here, right? So I want to know what's going on over here. But that's pretty much my comment on there. Dollar going up because interest rates going up. So I'm seeing that this trend will continue, dollar rising. The more it rises, the more it hurts emerging markets. So that's why we're just watching EEM and not trading EEM. Moving over to commodities, this is what I'm seeing with crude oil, right? The one and major line that I drew right here, resistance becomes support. So resistance 1, resistance 2, now support 1, support 2, and on its way to, go into new highs. So that's one way to really look at, support and resistance very objectively. This is a daily, by the way. So oil is going up. Anticipate higher gasoline prices. Yeah. Looking at gold. Gold hasn't been, really much of. It's funny, right? I would think that gold would be accumulating right now, but now that gold's not going up, it's kind of going down. I'm looking bearish on gold. But if you analyze a sovereign debt level or debt around the world, government debt, it doesn't look good, man. And we're printing money. Like the Federal Reserve right now is in a situation where they call it a lose situation, meaning whatever you do next, you're going to lose. So if you raise interest rates, you're going to lose. If you lower interest rates, you're going to lose, right? It's just which one's the worst of the two. And so I would expect gold to be accumulated from the professional money managers from around the world. Now, listening to their interview, they are bullish on gold. But looking at the actual market price action here, it doesn't look any, I don't see any bullish activity. So I would just sit back and watch gold for now, right? But there is a investment thesis, a strong investment thesis for gold. And that's really our government accumulating more debt and our central banks accumulating more treasuries. That's the main concern right there. Skipping a little bit ahead right here, talking about the topic on treasuries, right? In this interview with this billionaire, Stanley Druckenmiller, it was super interesting. I'm skipping ahead, but I really want to show you this because to me it was really interesting. He made this really interesting comment to me. One of the more incredibly revealing things that Trump said on TV or whatever when he went after the central bank is comment in his quotation marks in his words, "We shouldn't be raising interest rates. Don't they know we have all this debt to issue coming up?" Now, I don't know if you guys understood that, but that's like super revealing of like Trump's understanding of the economic machine. He's very intelligent by saying that, because it reveals to me that he understands the dynamics of like central banks and government, right? He's saying, why the hell are we raising interest rates when we're issuing treasury still? That means when we issue, we pay more interest. You get what I'm saying? So like you're doing yourself a disfavor as a government. We need more money, so we issue treasuries, but we're issuing it saying that we're going to pay even more. So it's a double whammy on their end. It's like, I don't know, it's like, I can't think of an example, but yeah, very, very fascinating. Did you guys get that, or you want me to kind of elaborate a little bit more on that? Yeah, okay. So yeah, going back to it. So we'll look at his comment later. It's super interesting. But going back to where was I? I was looking at gold. So gold, not much of a play. Looking at the commodities complex as a whole, or the entire commodities, right? Gold, soybeans, coffee, whatever, meats and stuff, is looking okay. The weekly is looking like it wants to go higher. Is what I'm seeing. I don't have my moving averages on, but it's coming off of a low. Let me show you that low real quick, DBC. DBC is what you use just to kind of gauge what is the overall commodities market doing, right? So that's what I'm seeing. It's coming off of a low. Again, why am I going over all this? This is called inter-market analysis, guys. Hey, welcome. You here for the investment club?
Yeah.
Yeah, welcome. Have a seat anywhere. So what was I saying? Yeah, so we this for the past, I guess, 30 minutes, we've been doing an inter-market analysis. That's like if you read any trading book, that's a major chapter, because you're not looking at just the stock market. You're looking at the relationship between the stock market and the bond market, and how they behave tells you, 1 + 1 = 3, right? It tells you that additional information that you need. But what we did is we looked at multiple, markets, so multiple inter-market analysis. And so now we have a better understanding of the world, what's going on, right? So let's go over to a slightly funner discussion, cryptocurrencies. I don't know if you guys invest in cryptocurrencies, but I'm watching that. Just because there are serious funds out there like Pantera Capital, right, who are betting a ton of money. You know them, or? Oh, no? Okay, yeah, so they're betting a ton of money. Just looking at the index, the market cap of all cryptocurrencies, it really looks like it bottomed at 200 billion. So let's go over the coin market cap, and this is what it looks like. Right, we're looking at cryptocurrencies, just reviewing this market, because I see a bullish case for this, but also there's substantial risks, and that has to do with our government. But the way the technology community is behaving, the ecosystem, it's very bullish on this. They're building out a ton of infrastructure, though. I mean, the price went out of control. A lot of premium was priced in. Now that the market is depressed, that's where I kind of get in there and start looking. So I am bottom picking is what I'm doing. So be careful, right? What I'm seeing is that this is the total value right here. If you look at the entire, I guess, coin market cap, this is what it looks like. It went as high as that. Now we're at the lowest point. So I'm bottom picking a lot of different types of coins out there. Just because Sylvia, one of our members, she went to an event recently, and this is another billionaire. If you guys know him, I forgot his name, Tim Draper. Right? He's doing a presentation on Bitcoin, and she said that he's seeing Bitcoin at 25K. Well, hey, if it's going to go 25K, I want to capture this move.
Seriously thinking it's going to rebound over where it was before?
Yeah.
Oh, man. Okay.
I mean, if you look at the total market cap, it's 250 billion, right? Gold is like in the trillions. So, there's a possibility. Now, I'll tell you my bullish case for this and my bearish case for this. The bear, okay, well, I guess we should do the bull first. The bull is that everyone has a mobile device now. And if you guys know me long enough now, coming to my meetups, I'm heavily like a tech investor in the stock market. I invest in a lot of technology infrastructure, from like software to hardware. So I invest in like a lot of data center plays, cloud plays. Data center would be like, or cloud plays would be like Amazon, Microsoft, Azure, Amazon AWS, and then also like all the hardwares, around that, like Arista networks, Wi-Fi switches, memory like Pure Storage, or database models, database software like MongoDB. So there's a lot of stocks that I play around that, because I see a macro trend, or a bigger trend, a bigger secular trend, and I'm trying to capitalize on that. Now, going back to cryptocurrencies, again, I see a lot of people playing into this, or a lot of technology people building out the infrastructure, but also we're socially different now, right? You see people walking around without a phone now? It's a little bit weird. Let me just show you this video on LinkedIn, and now you're going to be blown away by this. This is like, oh my God, I'm so glad I just remembered this. Okay, so it's so not normal to walk around without a phone now, right? Let me show you why. So I saw this video of a gentleman in China complaining that he does not want to pay with a phone. He's like, why do we need to pay with a phone? And they only accept mobile payments. And he's just like, crying over it. But it just tells you how much like society has changed. And you have to see that. And if you see that, it creates a very bullish reason for cryptocurrencies. Because everyone has a mobile device now. So right here, this is the video right here. So this is a gentleman that I'm connected with on LinkedIn. He's quite the expert in China. But I'm going to show you this video. Let me put it on. He's quite an expert in China. He's actually there. So I don't understand it. But I'm guessing some of the people in here do. But what, I'll tell you what he's saying in a bit. So I'll read out the post. So what happened here, right? Let's see. An elderly Chinese man didn't know how to use his smartphone to buy a bunch of grapes. What followed was a heated argument with the cashless supermarket staff. Sad to see his frustration. The man complains, the cashier said, we don't take cash here. I said, if you don't take cash, then I'll just leave. Security guard stopped him on his way out, leading to the scuffle. Isn't that interesting? Like, I mean, there's like no respect for like the older generation now. But that's how much the society has changed. And we talked about this in previous meetups through analyzing venture capital reports that China's a lot more advanced than us. I mean, mobilely advanced. They accept the mobile device. That's kind of like crazy, right? But that means to me that the people, the society as a whole has a higher level of infrastructure. And if they have a higher level of infrastructure, let's just say that the stair step is higher for them, and because it's higher, they could reach new heights. So they could do great things, is what I'm seeing in the VC ecosystem, or in the technology ecosystem in their world. So we're not quite there yet. I'm still using dollar bills. I'm still carrying some cash in my pocket. I guess I'm a little lagged. Right? But anyways, that kind of sets up the whole investment thesis for cryptocurrencies, right? If a gentleman complaining that they're not taking money for his grapes from a grocery store, I'm seeing a lot of cryptocurrency startups in China.
Why are you equating cryptocurrency with non-cash? I mean, my Visa card is a non-cash device.
If you want to talk about the evolution of money, for example, back in ancient China, they used to trade knives, right? And then some villages around the world. Ancient China knives, okay? This used to be their currency. And we had a session on this about 50 sessions ago. We talked about the evolution of money. There's also like an island where they use boulders as a currency, okay? Boulder money. Where it's like, hey, you see that boulder over there, man? That's how much I'm worth. That's not even a joke, but it sounds funny, right? It's called stone money, stone currency, right? And before right here, this is considered money, right? And then what came after this? Let's just say keep it simple. Let's go gold, right? But gold is too heavy, so we store it into vaults and issue currencies or paper or cotton, right? And that evolved into paper currency. And then from there we evolved into electronics, and now we have credit cards. And then from credit cards we evolved into mobile, right? So the currency is evolving, man, like physically evolving. Why am I equating that to cryptocurrency is that I see it as like a next evolutionary step. And I see the adoption rate is extremely high in China. That's why I'm kind of like, wow, this might just happen. I mean, if we think about XRP or Ripple, that's like the B2B financial institution infrastructure right there. If we're going to move B2B money, that's a game changer, So right now it's just a matter of time who's going to adopt. So, and it's coming at a very interesting time as well. Cryptocurrencies. We discussed that right now the system, the current money system, monetary fiscal policy system, the government and central banks, they're printing money like mad, and they're getting to a point where the balance sheets look insane, and our debt levels are insane. Their central banks' treasury asset levels insane, and so money managers are bullish on gold. But now, meanwhile they're bullish on gold, we got cryptocurrencies coming into play as well, just at a very interesting time. So I would risk it, man. I'd risk some money into cryptocurrencies. Yeah.
But to me, I think the gold itself has the intrinsic value, right? It's the material. But for cryptocurrency, it doesn't have any intrinsic value. I think it's similar to the dollar bill. So the dollar bill itself doesn't have any intrinsic value.
Yep.
Unless it has value because the government will sell it.
Yep.
And the whole society will
So she's talking about the technology aspect of it. Now, this is where you have to understand blockchain or a public ledger, right? There's something called a private ledger, like a trust system that you have between you and your sibling or your family. Internal, private ledger, trust. But this, with technology, now that we all have a phone, we could create a public ledger where everyone sees in real time the trust and who to trust. So the technology makes sense. Now,
what she's saying is there's no basis for it. It's an artificial currency created out of thin air.
It's
not like gold, where women buy gold jewelry. Gold has inherent value.
Yeah. So there's no physical value. There's digital value, there's soft value. There's no hard value. That's the crazy part. Now, I don't have to convince people to go along cryptocurrencies. I'm just kind of analyzing the macros, and this is what I'm seeing. This is the whole part of like building an investment thesis, right? I do have a super bearish view, potential view on cryptocurrencies. And, you have to look at everything comes down to also demographics. You might not adopt it, but are your children adopting it? If the next generation decides to adopt it, look around the world right now. Every asset class is at all-time highs. Stocks, bonds, real estate, even commercial real estate, right? Everything's expensive. How does someone like myself, 27 years old, find upside? Do I go buy $1 million home, hoping that's going to go to $2 million? And when we're raising interest rates, right? That's kind of hard. So where will millennials start building wealth or finding upside? So that's my curiosity. I don't know if it's true or false, but they have to start accumulating assets as they work. Millennials are coming into the workforce. Baby boomers are exiting the workforce.
That's really sad. That's a sad statement about life. I mean, the reason why houses have value is because people are willing to buy a house to live in it.
Yeah.
It has inherent value.
Yeah.
And I could sell you this piece of paper.
So that's correct. Yeah, that's correct.
Here's my currency.
Yeah.
You can get a case of it at Office Max, but has no value.
So let's take a step back. The reason why that's true, a physical house has value, which is good, but there's also this premium value added on top from the money printing. If you're printing money and everyone's getting money, they're going to place higher bids. And we did this in a Monopoly game where I put out a Monopoly board and I started injecting a ton of money to 4 players playing the game. And if you play Monopoly, the first home is like, I don't know, a couple hundred Monopoly dollars. I started injecting money and they started betting that thing at 1,000 to 2,000. So I'm not talking about, yes, there's real physical value in a home, but it's this premium on top from printing of money, right? And so that removal of that premium is removal of a premium on the existing value of the home. So the land might be $1 million, the home might be 300K, so 1.3 million, right? But there's a 200K premium, so at 1.5. So if interest rates go up, I'm seeing a slight decline of that premium, which that premium is the next buyer's willingness to bid it higher.
But premium is
it's subjective.
Product of demand and supply dynamics.
Yep.
It has nothing to do with injection of money. You wouldn't go and buy it in Ohio $2 million for a home, right? Where it's like just
So yes, so it's a mixture of supply and demand, and also like supply and demand of dollars, supply and demand of real estate, and supply and demand of dollars, or people equipped with a job to borrow money. So if interest rates go up, and it's also a headwind for corporations, they can't borrow. They have less. They're borrowing at a higher interest rate, so higher expenses. That means if they're over leveraged, that's even worse. And they're borrowing at higher interest rates. That means they have less money for less projects. Less projects means less hiring. Less hiring means less people equipped to go borrow money. So there's headwinds everywhere, man.
But I like our statement. There is no intrinsic value backing all these cryptocurrencies.
Mm-hmm.
Part of the reason
it's a social thing.
All right, most of the currencies values are holding up. I mean, dollar is holding up, or euro is holding up, or yuan is holding up. It's holding up because of the guarantee that comes from the government. At some point, people always believe that my government is going to guarantee this $1 is dollar,
Perfect.
whatever it's worth.
So your comment is extremely perfect for my bearish view of cryptocurrencies. I don't care how much infrastructure, how much money they're investing into cryptocurrencies. The ultimate bearish view is that our government could say it's treason to own a piece of cryptocurrency. And then they'll execute you for that, right?
I agree with you that the next generation is going to deal with that kind of money.
So,
but unless a few governments get together and decide, okay, we're going to legitimize this thing, this is not going to hold any value, right? And that is speculation. Most of my friends who have gotten into it are into it just because they think there is a hype.
Yep.
They can make money in the middle.
Yep.
Not like, I'm not gonna hold it for life.
Yeah.
Because I wanna get in and make some money and get out.
So yes, that's me mostly. I'm trading it, right? I'm not gonna like try and lose my money in it. So that's the major risk right there. And the reason why the government could say that is because they own the most, well, they're the strongest currency in the world, our U.S. government, but they own the most military. I wouldn't fight with that. All right, at the end of the day, it's not about money, it's about the guns. Right? So the reason why we could manipulate our dollar supply, at least this is my opinion, the reason why we can manipulate our dollar supply, which manipulates asset prices, right, is because, everyone, more than 50% of the world's transactions are on the dollar, and the way we manipulate the dollar value up and down, all other companies have to adjust to that, right? And we could do that because who has the most military, right? Who wants to complain? It's interesting. That's global macro, by the way. Global macro is an interesting topic. Sorry, we had some comments online. Let me see if I can answer. So that's my bearish view for cryptocurrencies as well. How do you play it? Well, I guess you gotta trade it. That's my opinion. The value in crypto is that government can't really control it. They don't need to control cryptos, man. They need to control us, and they can control us. That's the issue, all right? How do you go shopping with stone currency? Well, they don't really shop. They just kind of say, everyone, we have a village meeting. This is my stone, something like that, right? What about currency exchange? Okay, so we answered that one already. I agree. Isn't the value of cryptocurrency in transaction time an anomaly? Yes, but it doesn't matter, man. It's if they say if anyone has holding a piece of cryptocurrency and you're gonna get executed, I gotta drop it, man. That's there is not much anomaly. Bitcoin is a public ledger. Yes, so that's the current situation that I'm kind of seeing from a money manager's point of view. So let's move along because I want to make sure I have time to share with you guys the stuff at the end. But yeah, very awesome stuff. Damn, we got 20 people online. Oh, okay. Well, that's quite a bit. Big crowd today. Sorry. So did that answer your guys' question? Like, there's a bearish view, yes. I know there's no physical value, but if you geek out to technology, I'm bullish on the technology, just not on. I'm bullish on blockchain, not on cryptocurrencies.
Absolutely.
I guess. Yeah, absolutely.
It's like imagine you make the money in between.
Yeah.
Yeah.
So I mean, if you understand this game is competition, right? So it's like I can't make money without someone else losing money, and if you know that, at least I know that, I would hustle really, really hard, right? Like everyone wants this nice lifestyle, everyone wants more money, but you gotta understand that you gotta work a little bit harder than what everyone else is doing. So if everyone else is going to school, paying overpriced education, maybe you should, I shouldn't say not go to school, but pay less for education. So this is what the economics of current education. We talked about this in the past. I want to bring it up again. The current state of public education is that the cost is up here, but the knowledge is down here. So now there's opportunity for private education where the cost is down here, but education leading. So public schools are giving you lag knowledge. And I joke that my finance degree is a financial history degree, right? Because I paid for a financial history degree. That's how I feel. Because when you go out into the real world, they don't teach you like sales or deals or investing. It's a different game. You only learn that once you're released into the wild. So, I mean, yeah, that's the current state of education from what I'm seeing. You're seeing, private funds going into Draper University, Udacity, Coursera. Hey, I mean, there's margin on that, Yeah, there's this, I started looking at public or private institutions and I realized like, holy crap, it's a tax loophole. So I don't know if you guys know, but I learned recently that private institutions like Stanford, Harvard, they don't have to pay taxes, right? There's no business tax. They're private. There's no business tax. That's insane.
Is that good for schools as well?
Okay, this is like social reality. People will buy a $5,000 bag. Some women would buy a $5,000 bag. Some men too, I'd say. But intrinsic value-wise, it's like you're giving so much margin. People don't understand margin.
If it's status, people buy a $10,000 Rolex.
It's social
which
status.
Is less accurate than a Timex.
Now, if you see me buying stuff like that, I'm doing it for marketing. I'm not doing it for myself. I would do it for the marketing. But yes, I would. I mean, if I had a business and I started buying like a supercar, like a Lamborghini, I'll probably expense that as like a marketing expense. Just kidding. But yeah, it's interesting. I don't know. That's just how our world works. You know, we pay for the ultimate, private institution, but a book's a book, man. Like, you're gonna pay for the kid to go there. Is the kid, at the end of the day, the question is the kid gonna pay attention and really learn, right? Yeah, you could go there for the network. For sure, the network's strong, right? Because the rich people kind of crowd around there. But hey, there's, if you truly want to make it, I feel like you just gotta work for it. It's hard work.
If you're interested in like the higher education, sort of like Stanford, there's a professor and an economist at Stanford, Thomas Sowell.
Mm-hmm.
He talks a lot about just how inside these big institutions, you're not really getting money sort of.
Yeah, you're not. I mean, you could just look at the economic. I could chart it out and show you that it's not worth it, right? It's just leave it for the people who have money to spend on that. But if you're someone who doesn't have a lot of money, man, I would just send my kids to community college. No, actually, I would send them to Coursera or Udacity, because what I'm seeing is I really have friends who went to like UC Davis and all that, right, Santa Barbara, whatever, and they come out not getting a job because they don't know how to hustle, find the deals, right? Go sell yourself. They don't know any of that, right? And now they sign up for Udacity or a $5,000 course to learn how to code. Like, it's just because you have to understand, again, it goes back to demographics, right? I mean, the older generation, the thinking is a little bit different. The younger generation, the thinking is a little bit different. But the confidence of the older generation is a lot higher. The confidence of the younger generation is a lot lower. The younger generation sees what makes money, sees what's working, but the older generation has more confidence, and the younger generation has lower confidence, so the older generation should say, hey, that's not the way. The younger generation with the least confidence says, okay, I don't have confidence to say yes, but I'm not gonna go that way. Don't go on YouTube and make a YouTube channel. Don't go go build up followers on Instagram. Right. Let the small minority who sees that economic opportunity and take it. So to me, at this point, I don't care what anyone says. I'm just gonna look at the numbers. So you're not gonna tell me like where to bet my money or bet my time. I'm gonna bet it on the numbers. Because at the end of the day, the most honest thing is the numbers. But you have to learn to see the numbers. Yeah, sorry if I get so passionate about that.
So do you see future for these education-related companies?
Yeah, highly high. I'll explain it why. Back to the global data center, and this is a repeat for people online. This device, you start a business on here, you beat almost every physical business out there because the infrastructure. The infrastructure of a restaurant. Physical building, parking lot, capital equipment, workers, and some food, right? Physical legacy infrastructure. What's the infrastructure of a YouTube channel? If you follow me on, I have a data center infrastructure that is run by Amazon AWS or Microsoft Azure. I have sophisticated RAM, sophisticated database software like MongoDB or Oracle database. My business is superior because it reaches the world and not a local parking lot. But if you're too caught up in legacy thinking, then you won't see it. So I learned at this point that I have to be very adaptive. You gotta be like Bruce Lee says it, you gotta be like water, man. You gotta be like water. So just adapt to the situation and capitalize on the opportunity that you see at hand. So some opportunities that I see at hand is definitely the technology space. It's gonna keep going. Healthcare space, gonna keep going. This educational inefficiency right here, but also education for teaching the older generation. We talked about this in other meetups, that you could teach the older generation for money. They'll pay. Because, I haven't drawn this in a while, but let's draw it again. What I would draw in the past is basically efficiency line, right? So let's say that this is the line, right? The education line, right? The level of technology is up here. This is technology right here, right? But the technology adoption is like right here. Right? So what does that mean? There is space, there is margin right here to be earned. There is business opportunity to be earned. Right? Because technology up here is like, LinkedIn Sales Navigator or Facebook, Facebook marketing. But business owners are operating down here, where it's like physical marketing. So there's money to be made in between to teach them how to do Facebook marketing. That's the economics of it. If that kind of makes sense. This same line applies to education, right? If I recall. Well, I won't do the line, but yeah, we would draw that line quite a bit in the past. So there's some questions online I want to answer. Let's see. There's not much. Okay. Andreas Automophilus is one of the best crypto, educator. Yeah, he's a good educator, man. I'll keep note of that. Thanks for sharing that. Udacity is now charging $2,000 per 6 months instead of $1,000 earlier per course. So over time, they may be becoming equally expensive. Maybe they realize the demand, and so they price it higher to lower the demand so that they could, scale accordingly. But it's still cheaper than public institution that's teaching lag knowledge. So, I'm not telling you guys what to do. I'm just telling you like the economics of things right now. But my uncle, my cousin, he's now going to UCSF, and they're paying like an arm and a leg for it, for like, an education that I know in real time. You go out there, you start doing deals with HR to get a job. It's not gonna work. So.
UCSF medical school.
Yeah, but he's no. USF. Is it US? I forget.
Yeah, just a private school.
Yeah, the private school. Sorry, yeah, USF. But he's not pursuing a degree that's the ROI, man. Sorry, I'm a big ROI guy, so I can't tell an individual, what to do in their life. But if they want to do that from a financial, consultant perspective, that's a little risky.
Well, it's like saying all colleges should cancel every course on Greek history and mythology and all the other bullshit classes where there's no value.
Let me tell you this: let's say I'm the college. Why should I cancel when they're making me money, baby?
No, I'm saying, sitting in the room might as well be watching a movie. It's just entertainment.
Well, what I learned, like with Stanford students and Harvard grads, there's this network that
it is the network.
you buy into.
Yeah. So I definitely agree with that, 100%. Yeah. But let's move on. So that's cryptocurrencies. What I want to take note here is Bitcoin, Litecoin, Ethereum, and XRP. Bitcoin's still holding 6,000, which is good to see. With the recent move in XRP, I'm thinking this might be lifting other cryptocurrency markets as well. So Ethereum is still holding 200. That's the line I'm watching. That's my line in the sand. Bitcoin, my line in the sand, 6,000. XRP is looking bullish. So we'll see how this goes. Moving on to the FANGs, and then onto some stocks, and then to the hedge fund manager, the billionaire. But how you guys doing so far? Is it good? Okay, cool. Facebook, I like Facebook. I think a lot of money managers like it as well. They did have negative news on Friday, but I'm eyeing a position on this one at about 160 risk, and their calls. So I like this one. I have some at 170. It's against me, but I added one at 160. So that's my next area. Just because they had parabolic earnings and sales, man. And I kind of see the social landscape. They beat Snapchat, right? If Snapchat's not going up, well, let's look at it. So this is Facebook right here. When you say your line in the sand and Ethereum is 200, are you saying you're bearish? Yes. So if it starts to break down that line and not really hold it, then it's not, okay, I'm not saying it's bearish or bullish, but it's like my risk. Like I have a position, and that's how I manage my risk. Neo Steve, is that you, man? I still haven't met you yet, dude. It's like anonymous online people I'm chatting with. Well, I'm glad that you're here, man. But yes, I agree. That's what I'm saying. Yep, soon. I'm a lot closer, I'll tell you that. I'm in Cupertino now. Anyways, so that's Facebook. I look at this because it's a FANG. To me, it's like S&P 500. You have to look at it as a whole.
Do you think it's bottomed out?
I can't say. I think I wouldn't say it's bottomed out. Maybe. I think it's an opportunity to look at for a potential, trade. One of the gentlemen, his name is Raj. He's online right now. He's in Texas. He used to come here, but he moved to Texas. He took positions at 160, 161. That's a nice fill in my opinion. If it breaks 160, it could go to 150, but 150 I'll be. Well, would I hold back on adding more? I don't know. We'll see. But that's Facebook, right? And look at Snapchat, their other competitor. Not as close, I'd say. So this is what it looks like. Snapchat breaking down, going down further. This one, I think, could go down still. It could go down to 5. I think this one will go down to 5. Anyways, that's Facebook. That's one of the fangs. 160. More bad news on Friday made this one decline, but that's something to look out for because on Thursday it rallied quite a bit, and I thought that was the go move right there, but not yet. Amazon's still stable, looking strong, and they are definitely a strong player in the AWS market or cloud, server. So a lot of people think that Amazon is just Amazon.com e-commerce, but it's actually like two companies in one. It's like it's a cloud company and also a e-commerce company.
So for Amazon,
Yeah.
if Amazon's the biggest retailer in the world, consumer confidence is high, unemployment's low.
Yeah.
Does that suggest that the Christmas season will be their biggest year in history and that the stock will go up another 10%?
No, I think their stock is going up right now because of AWS more than e-commerce. That's kind of like my opinion because I see what Jeff Bezos is doing, man. I'm super bullish on the data center play, the cloud play, and he's like, hey, if we're investing in the data center play, I'm going to get direct access and build a business around data centers. This is probably not the up-to-date one, but I could show you like what their pie looks like, right? So Amazon right here, 42% is e-commerce.
Is this that Findus?
This is Toss, Thinkorswim. But AWS is 42% of their business. You see what I mean? So they're like almost about half. Big chunk, right? AWS. So
Amazing.
yeah, it's amazing. So before when I didn't know about that, I would look at Amazon as like, oh damn, this is for e-commerce. It's going pretty damn high. But now that I learned that it's a data center play, I would categorize it with SAP, Oracle. Yeah, those guys are big, especially.
But they're categorized as consumer discretion.
Now you see like this yeah. So now put yourself in the shoes of a categorizer, right? And you will have parameters that you define as a category. And you said the moment the business revenue goes over 45%, then they will be categorized as this. So Amazon, I mean, they're pretty tricky with their financial statements because they hit their earnings, but their equity base is going up. They could just stay on the base of like more e-commerce to remain in that category. So you only think at this level when you start to like really like understand what's going on, right? Understanding like on the back end, like how do they index stuff, right? There's definitions that they define.
But looking at that, like AWS is 42%. I didn't know that.
Yeah, it's big, right? So that's why I brought it up. There's a fun. Yes, you guys got it. Okay. What do you say?
He had a question on.
How did you do that on Amazon Toss? Okay, he answered them. Yep. Okay. Anyways, yeah, Toss is a very powerful tool. Sometimes I think that I don't have to subscribe to all these things, but I do just because I'm a consumer of financial education. So.
What do you subscribe to?
What does TOS stand for?
Thinkorswim. Well, I subscribe to a lot.
Thinkorswim.
Guru Focus. I used to have Morningstar, FinViz, Real Vision. Real Vision I paid a large amount for to be a partner with them.
So these are all modules on top of TOS?
Say again?
So these are all extra on top of the original
Yeah,
platform?
yeah. I mean, you could use the free, but they'll cloud your judgment with advertisements. Yeah. I mean, yeah. I have quite a lot.
I mean, Thinkorswim by TD Ameritrade?
Mm-hmm. Yeah. TD Ameritrade is the brokerage. Their software or the software platform is called Thinkorswim.
Okay.
Moving on. Amazon's looking good. So you guys know that, they're pretty good. The company right around the corner right here, Apple, setting up a cup and handle. I'm seeing a potential cup and handle right here, right? You got that rally, and then you got that rounding bottom, and then maybe a handle, and then higher price it goes. This is Warren Buffett's it's his biggest position. Let's confirm that real quick. This is Warren Buffett's biggest position. We're skipping ahead. I was going to show you guys this later. Warren Buffett's biggest position in terms of, not shares, but let's do market cap value. Yeah, his biggest position is, wow, he put $1 billion into Apple.
This is another one, Guru Focus?
This is the one. This one costs a lot more though. This one costs like $850 a year, if I recall. So Apple, his biggest position right there.
Is this
Warren Buffett's portfolio.
Are you looking at Berkshire Hathaway's holdings?
Yeah, right here, Berkshire Hathaway. Right, last updated about that many days ago. Right, his biggest position is Apple. Yeah. So, as we evolve, into learning how to analyze stocks, right? You pass the whole chart analysis, the financial analysis, the business model analysis, right? What product or service, the intermarket analysis. Now we're growing into the insider analysis or the external money manager analysis. Those are big categories that I feel that I've been underutilizing. So right here, what we're looking at Guru Focus, we're looking at Guru or money managers. So that would be the external professional analysis. At least I would categorize that in my head. But Apple, yes, looking bullish. If this keeps going up, so will Cupertino real estate prices, in my opinion. I mean, a great selling point on the home. They should put this on like every. They do actually. They put home elegantly placed next to Apple spaceship or something like that. Yeah, it's kind of funny. And like all the open houses I've been doing, it's in Santa Clara. It's like Apple spaceship, right? A mile away or whatever.
And a big, massive piece of land was bought in East Palo Alto, right?
Oh, I didn't track that one.
Yeah, just recently, within the last month, a massive amount of land.
So I'll tell you a big deal right now. I didn't read too much into it, but one of the person that I talked to here, her name is Liz. She's online as well, I think. But we talked about so right across the street is Phil's, right?
Is what?
The plaza, Phil's.
Oh, okay, yeah.
Sand Hill Property. So Sand Hill Property Company owns the piece of land right across, the mixed use right here. It's owned by a gentleman named Peter Powell. Peter Powell. This is the gentleman right here. So he's fighting right now I think he already got the Valco approval. So now he's working on the Valco deal. You work with Peter Powell or anything?
No, I know about the Valco.
Yeah. So he not only did Valco, but he did the beautiful piece of land on Cupertino Main Street right here, right across the street. So where the Phil's, all the nice, what's that dim sum place called, the famous one right across the street? I forgot.
Dynasty?
Is it Dynasty? There's another one. Meat Fresh, 85 Bakery, Target, Starbucks right across the street right here. I chose this real estate office for a reason.
So it's called Lorraine Powell Jobs, about 30 acres of East Palo Alto along the water, but no disclosure on what the intent's for.
Yeah, I don't know, man. There's so many. I'm not a big tracker of commercial real estate deals, but I guess I don't know what.
Massive. I mean, it's a massive piece of land.
Is it? Yeah.
Well, yeah. If you look at where University Avenue hits,
so
anything around there, the property value is going to go sky high.
So you guys know this right across the street, right?
Yeah.
Yeah. So he developed this. Now he's trying to redevelop Valco.
Right.
You think that's going to go through, or?
I don't know. It had a lot of arrows, but I think he got it. He got 3,000 units approved.
Right. The city actually approved it. The city of Cupertino actually approved the Valco project.
Oh wow.
Yeah.
I thought it was like it was voted down or something.
For some, it isn't exactly what he proposed. There are some changes that is requested and so on, but the basic development is there. So
That was approved.
they're going to knock Valco down and build.
So this development is called Valco Vision. Wait, no, more information will be found at Valco Vision. Let's see. So if you want to know specifics, this is where you're going to go. He's building something really, I mean, I don't live in Cupertino, right? It's going to be hard on the people in Cupertino because of traffic, but from external, person outside of Cupertino, it looks like an exciting place to hang out. So I plan to grow a business here in Cupertino. This is like a key, key area in the valley for me. Like all the connections to build, it's going to have to be from here. I forgot what this project's called though. Sand Hill Purchase Property, September. Valco Mall. Sorry guys, I'm trying to show you images of the place. I know people already saw it, but I guess you guys could search it up on your own time, but it's going to be really big. It's going to look like this. It's going to have like a town center and all that. Let's see, Jack said, only about 20 minutes left with me. Can you refocus on stocks? Yes, I apologize. Okay, all right, let's get back to it. So we digress. Google rounding bottom, 100 MA, looking good. So, I mean, I prefer to be leading, just so that I know the FANG index is pretty stable. But this is what you're getting. So, let's get this back above 50 MA. But this looks like a solid respect to the 100 MA right there. Microsoft, solid, robust. One of my big positions as well. I just like it, man. Microsoft Azure. And not a recommendation to buy. Okay, this is all like educational stuff. I say that because I've seen like the crazy things that could happen for not disclosing. Yeah. Okay. Okay. So that's the FANGs right there. Now there is this new ETF, XLC. It's not. I mean, the chart doesn't look nice yet. The chart looks like this on the daily, but the holdings look incredible. They got Facebook, Google, Disney, Netflix, EA. I don't know that one, but Activision, AT&T, Verizon, Twitter. These are some good names. So, you know, the market, or market leaders, spiders, they're indexing a new ETF now, or a new category, the communications category. I like it, man. It looks like it's going to perform like an XLT. XLK. XLT is not technology. XLK. So if you guys know spiders, XLK is the technology ETF. I think this XLC one is going to perform very stable like this XLK one. It's owned by this company right here, SPDR, by State Street Global Advisors. Hey, they create great products, you know. Like one of the top traded ETF is SPY. So, anyways, this ETF's new. I just thought I'd mention it. It looked really interesting. But yeah, let me know if you have any questions on this, and I'll go on to the next segment. Going over to some stocks. So semiconductor segment. I think this one's holding back for like a super move soon. So I would be watching semiconductors pretty closely. Check out this consolidation right here on a weekly. It's really consolidated, right? You guys seen this before. So I know some people are looking at like stocks like Nvidia and stuff. That one's starting to look pretty bullish as of late. So this is what I'm seeing on the weekly chart for semiconductors. This industry is waiting to move pretty fast, but not yet. We'll give it some time. In terms of technical analysis, check out how many times it respected the 200-day moving average. 1, 2, 3, 4, and I thought this was it with the reversal candle over here, but it looks like 105. I'm taking positions and stuff like Intel and all that. So INTC. It's a position that I'm seeing. What do you think about cannabis industry? I think that one's hot, but you have to pick the right ones. I haven't done too much analysis on that. I've been more focused on tech stuff as of late. Alex, have we met Alex? Okay, but anyways, let's move on. So that's what I'm seeing with the semiconductor. So keep in the back of your mind that semiconductors are kind of on the move, or it's in sideways move. And I think this one, the interest might come back with like the level of technology growing. I like to think of semiconductors as like the hardware and software as the software, right? But going down to momentum stocks that I'm seeing. So let's look at NVIDIA. Ooh. So, say again?
It's a good one.
NVIDIA?
Well, just in terms of the write-ups.
Yeah, as of late, I think I think this one's looking good. I think this one's going to start moving. So I'd be watching this. This is what I'm seeing for NVIDIA. All right, so quick technical analysis on it. We already know that this is a pretty good business. Move this to this. Pretty good, not bad. Ooh, that's sloppy. Yeah, this looks good, man. So we had a large move right here. This is the line in the sand right there. We finally crossed that line. NVIDIA was pushed by crypto mining. Was it really? I didn't track the news. I thought the news was like the lack of CPU and GPU delivering to the market, but not too sure on that. Let's skip ahead a little bit, okay? Because I want to show you this video with the time that I have left. So NVIDIA, Disney. I have positions in Disney. I was trading this one actively this week.
How come you don't have AMD on it?
AMD, I mean, yeah, AMD is a momentum play as well. I like that one. We'll look at it in a bit. So, yeah, Disney's looking pretty active, guys. As you can see, this high volume move right here, that one candle, and then retrace, and then it's skyrocketing. So this one, if you pull up a weekly chart, this one's looking really, really primed for a breakout. Look at that. My gosh, it respected the 200-day moving average on a weekly. So that to me is like very powerful information right there. I think Disney could start running like Nike, all right? And I mentioned this several times already. This is what happened to Nike. Similar thing right there. So I'm seeing Disney as a potential big move. Next stock. That would be
Just stock on that or options?
option. Yeah. You trade options or?
Not this me.
Oh, what do you trade?
Several stuff, mostly tech.
Okay, cool. Yeah, so SAP, I like SAP as well. One of the global leaders in ERP, enterprise software. This one I discovered a recent high activity, so I want to kind of follow up with the stock, but it's kind of reverting. Be on the lookout for earnings for now, but I'll keep watching this one. I like SAP. SAP has some robust income as well, in terms of their fundamentals. SAP, Nike we looked at already. Square's been active in the market, so I want to pull this one up. This one just looks really good. I think this one's going to go even higher, right? Very similar to the NVIDIA, right? I'll show you why. If you look at NVIDIA, it looks very similar to this. Check out this high volume right here, right there, right? And that line right there, right? Now let's pull up NVIDIA. Similar, but a little bit not as clean, right? Do you see a similarity? Whoa. Let's see if I could do this. Oh no, I don't think I can. So right there, line down, high volume up. This is indication to me that it's gonna go sideways, base out, and maybe go higher. But I see someone buying interest there. How do I know, man? I don't know. It's just years of looking at charts, and it's telling me something crazy. I don't know. But yeah, NVIDIA looks like to be on the move. Square on the move. What else? I have 15 minutes left. I can stretch it a little bit. I just gotta do some things. Get lunch, Team. I'm gonna move a little bit quick because I should have 10 minutes left to go over the team. Looks good. This one's a little stretch, right? Not really earnings, so I'd be a little cautious. Always look at the earnings and financials, depending on what you're playing. If it's a trade, then if you're trading, then I guess you could look at lesser things. But if you're really placing a big bet, you might want to look at stuff. ANGI, this one came on my radar. This one's looking good. Looks like it wants to move higher. I haven't looked deep into it, so can't tell you much. IAC, owner of Match as well. So SK, I know you like this stock. I think this one's starting to look pretty bullish. IAC and Match. So this is another billionaire who owns this publicly traded company, part of it. And he has like a well-done internet portfolio that I respect. I think if you have an internet portfolio in this day and age, you're leading in terms of your thinking. Might be a bias, but whatever. FTNT, this one I've been reading the investor relations report. Looks very powerful. I mean, in terms of what they're doing. They're making great sales and EPS is positive, so I like that. I have some of the reports out, the revenue mix and stuff. If you guys want to read this, I could send this link. So this is the link. I'll send it to the group chat.
Where's this group chat?
So you get my phone number and I'll add you to it. It's on Telegram. We could do that after this meetup if you like. Let's see, Match, IC, V, IQ. Okay, we'll skip because I'm running out of time, but you guys could take note of that. Some things that I'm looking at. INTC, reversal, Intel, right? Let's look at shorts. IGC. We're only going to look at one because of time. Look, this is a short. I mean, you could look at this and tell me you're going to go long. And if you say you're going to go long, then I'll think the best of you and say you're a trader. Because you better know what you're doing.
So what did it move to?
So it moved from 50 cents to about as high as $7.50.
For what reason?
Some parabolic news. I don't know. I didn't check it, but I mean, this is the advanced session, so we talk about penny stocks. Normally, I don't talk about penny stocks because that's like risky voodoo stuff, If you don't know how to if you don't know how to play that, you might come back here and put a lot of hate on me or whatever. But yeah, let me show you the others, and you guys could look it up. But this is what I'm seeing in short. To short these, you're going to need. No, I mean it will, but I think it's going to go down pretty hard back to like 50 cents, or at least back to $1 for this one. Let's see, ACST. Here's another short that I'm seeing. All right, these are all junk companies. At least I've categorized them as junk, but this is a pharma. I'd be careful with this one. If it's biotech pharma, be careful with those. Those could skyrocket on no earnings. It's all about the approvals and stuff. And then I think the other one's also the same thing, HETC. So be careful with these, all right, guys? This is where, the RSI, it's in overbought territory, and I'm expecting it to kind of fall down.
Oh, so they entered the cannabis-infused drink business on Friday.
Are they? This is the company? Oh, the other one? Okay, yeah. See, there's so much. That's where the dumb money's attention is right now, so you want to capitalize on that.
So they're coming out with a new energy drink called Nitro G, which has cannabis, whatever in it.
Okay, guys, so let's move on to the final segment. 10 minutes left. Stanley Druckenmiller. This gentleman, I guess if I could pump him up, a hype. Yes, it's a hype. This gentleman worked with George Soros closely. He's a billionaire. He's a money manager, a hedge fund manager, and George Soros is also famous to be known as the guy who made $1 billion in one day. 1B in one day. That's crazy. They work together, and this is them today. Much younger, much older. 4.8 billion, 8.3 billion net worth. In my, I subscribe to this, I guess, Netflix of finance or whatever, and I've extracted a few highlights from this discussion that I just thought, like, dude, if you could, I'm watching an interview with a billionaire. That's how cool it is, right? And just to see how he talks, how he thinks, how he trades, makes me a little bit smarter, I hope. So I've cut out the cool pieces, and I'm going to show you today. So the first one I have is him talking about Warren Buffett. So this one might not be insight into his trading, but him talking about Warren Buffett at 4220. 4220. So he mentioned that Warren Buffett did not perform for 10 years. I didn't know that. And no one, in his words, no one talked about it. So,
Apple was a savior, otherwise he would be down.
Apple?
Yeah, that was a savior.
So let's listen.
Soros for 12 years. One of the things that...
I'm sorry, 4220.
I missed that one.
Uh-oh.
Many man.
If I could get it there. People online, can you hear?
Around Mr. Buffett from 90
Okay, right here. So listen to this part. Okay, cool.
abilities to go in an illiquid instrument, which an equity is if you're going to bet that kind of size on. You just have to be right. And for all the hoopla around Mr. Buffett, from 98 to 2008, that's a 10-year period, Berkshire Hathaway was down 40%. Nobody talks about that. If you had a hedge fund, you couldn't have a hedge fund down for 10 years, 40%. They would have been out of business in year 3, 4, somewhere in there. But to answer your question, I'll get a thesis, and I don't really, I like to buy not in the 0 inning, and maybe not in the first inning, but no later than the second inning. And I don't really want to pile on in the 3rd or 4th or 5th inning.
So listen how he said, okay, one is he pointed out that Warren Buffett didn't perform for 10 years. He was down 40% for 10 years. I didn't know that. I wasn't tracking stocks that long. Because that'd be 17. But now the next part, he started talking about piling into a trade. I could really relate to this because when you have a winner and you know it's a winner, you want to pile into it. I got maybe an important text. I think I forgot to tell you the combo. Cool. Yeah, so when you trade, you want to pile into it, I guess, from his words. And I'll show you that example where he actually talks about that. That would be 22 to 23. So I just wanted to show the first part because I didn't know about Warren Buffett that way. But this is him talking about how he trades. Insight from a billionaire. How a billionaire talks about trading. I'm not a billionaire, so.
Money you're talking about doesn't mean they'll be effective, but.
So how are the algos operating? Why are they distorting the price signals?
Well, I'll just again tell you why it's so challenging for me. A lot of my style is you build a thesis.
Build investment thesis.
Hopefully that no one else has built. You sort of put some positions on, and then when the thesis starts to evolve and people get on and you see the momentum start to change in your favor,
hear that?
Then you really go for it. You pile into the trade. It's what my former partner George Soros was so good at. And we didn't call it, if you follow baseball, it's a slugging percentage as opposed to batting average. Well, a lot of these algos, apparently no one else has built. You sort of
So build an investment thesis that no one else sees, such as like the educational example, like majority of people still operating on legacy education versus new education, and go big on it. But that's not a recommendation, okay? You get some skill,
Right,
experience.
first he said put some position on.
Yeah.
put some
So one more time.
positions on, and then when the thesis starts to evolve and people get on and you see the momentum start to change in your favor, then you really go for it. You pile into the trade. It's what my former partner George Soros was so good at, and we didn't call it, if you follow baseball, it's a slugging percentage as opposed to batting average.
It's one of my trades.
Well, a lot of these algos
trying to pile in right
are
here.
based on the standard deviation models. So just when you would think you're supposed to pile in and lift off, their models must tell them, because you're 3 standard deviations where it's supposed to be, they come in with these.
So I don't want to scare you guys, but he talked about how now it's a little bit different with algo trading. There's algorithms in the market that kind of detect you piling in and kind of nerfs that previous style. But I mean, from my own experience, it still works for me. But I don't do it as big as him, right? He's probably doing like 100 million shares, or 100,000 shares maybe. So that's example of him like talking in terms of like trading, right? Because I went to college and people are like, don't trade, don't look at technical analysis. But dude, like, get with the program here. So and then he starts talking about chart pattern over here, 20, 30. So 20, 30, right there.
Dreams out there, so there shouldn't be a lot of movement one way or the other. From January to May, they were massive underperformers. In the old days, I'll look at that relative strength and I'll go, this group is a disaster. Okay.
So he's looking at relative strength. So if a billionaire is looking at technical analysis, that's something that's telling you something, right?
Okay, Trump's making some noises about drug price in the background, but they clearly had chart patterns and relative patterns that suggest this group's a real problem. They were the worst group of any I follow from January to May. And with no change in news, and with no change in Trump's narrative, and if anything, an acceleration in the U.S. economy, which should put them more toward the back of the bus than the front of the bus, because they don't need a strong economy, they have now been about the...
So he started talking about analyzing patterns and all that, right? So I took note of it right here. But they clearly had chart patterns and relative patterns that suggest this group's a real problem. So to me, I can really relate to that when I'm looking at charts and stuff. It's just one of the many technical analysis tools that I have. Moving on to the last 2 comments that I have. Trusting instinct in technical analysis, 1850. So I love it when he says things that kind of reconfirms how my belief of trading and all that. So I'm trying to find it for you guys. Let's do this. 1850. Bear with me, we got 4 minutes left.
Well, let's talk about the algos. We weren't focused on that, but I was. I think you were trading in a bull market and a strong economy. What happens when it's a bear market and a bad economy? And will things get out of hand? So knowing that, and knowing that we're at risk of that any moment unfolding, January, February just came like this. How are you protecting yourself and insulating you? What are you watching for?
So it's a big question. How are you hedging yourself? How are you protecting yourself from a down market?
That might happen.
His answer.
It's a little bit like after 9/11 waiting for the next terrorist act, in which case you would have missed a roaring bull market for the next 6 years because you're sitting there because Dick Cheney told your neighbor you're supposed to move out of New York. I'm just going to trust my instincts and technical analysis to pick up this stuff, but I will say that, and I proved it to my own detriment the last 3 or 4 years, the minute the risk reward gets a little dodgy, I get more cautious than I probably would have been without this in the background. But I want to be clear that the major challenge for the algos...
So, trust is instinct and technical analysis. So he's using that, he's applying the same technique, all right guys? Last one, I won't reveal the Trump one, but that was pretty interesting as well. Just, what the heck, let's do it. 29.50. All right, 2 more before we go. 29.50. Right about here.
For the reasons you cite, one of the more incredibly revealing things Trump said when he went after the central bank is, we shouldn't be raising rates, don't they know we have all this debt to issue coming up. But it's a chick.
So that was a line. All right, that's, if you know global macro, that is like, whoa. Well, at least to me. Okay, and then the last one, and we could probably do the fund manager analysis another time, but the last one is 118, right? This one's fun. And then we'll call it a day.
And then, of course, stem cells are another great hope in all of these.
So it's also going to tell you why do I like this gig, right? Like of all the businesses to own out there, why should I own an investment company?
These areas, and I know Fiona was very enthralled with Susan Solomon and what they were creating in the bang for their buck. So in both cases, we went for an area that we thought showed great potential in terms of progress. And we picked institutions which we thought with very strong, innovative leaders who could execute on the proposition. Frankly, if some other institution solves the problem, I'll be thrilled. I don't really care. I'm sure you saw what NYU did with the medical school.
So right here.
I would also be, while it wouldn't be the greatest outcome for NYU, I think even the people who run NYU, our dream would be that starts an arms race, because the brain drain going out of medicine and to less productive things like my business and the tech world, social media and things, has been horrendous, because by the time these kids go through 4 years of pre-med, medical school, residency, and then fellowships, they usually don't start earning money until their mid-30s, and they got $500,000 in debt. And you can be making $2 or $3 million a year in my business with a lot less preparation at the age of 27 or 28. So I really hope Harvard, with their $40 billion endowment or whatever it is, and the others decide that they can't let NYU just grab all the great medical students.
Okay, so pretty interesting, huh? It is a lucrative business. The more I think about all the businesses out there that I analyze, and you know what, I mean, owning a business means being there for the people that consume your production, right? I can't find anything that beats trading yet. And I'm really trying to find something that beats trading. But trading is definitely like a beautiful art and beautiful, I don't know, career or whatever you want to call it. It's fun, man. It's but with that being said, I'm gonna close it out because I got a hard stop at 12. Thanks to everyone for coming today. We had a big crowd online. If this online thing gets too big, I gotta lock it up. That's because it's only, oh wow, I got 151 max. Well, I still gotta lock it up. It's just we'll see. But thanks so much for coming today. We still have like maybe 10, 15 minutes for questions if you have, but I'm going to start cleaning it up. I got an open house to go to.
Theme for next week?
Theme for next week? It's back to the basics.
Sorry, what?
Basics. So
Basics.
I go advanced, basic, intermediate, basic, advanced.
Do you take requests for topics?
Yeah.
So
I've been waiting, man. I've been waiting all day.
Since earnings season,
Yeah.
October is when results come out. Do you have any thoughts on having sessions on evaluating
Earnings?
and or projections on earnings?
Yeah, like gap ups, gap downs. It's a different style of playing. Yeah, we could do that as well.
Okay.
I've been waiting for a request, but so far it's been myself.
What's your take on marijuana stocks?
On what stocks?
Marijuana?
Marijuana stocks? I think it's undercapitalized right now. I think there's opportunity, but you gotta find the right players. Tilray is pretty big. I would play that one for now. It hasn't got to a level where I would consider as a stabilized investment yet. Educational purposes only. All right, guys, online. I'm gonna shut you guys off and call it a day. Thanks so much for coming. We'll